and that's really showing up in the Qs, not breaking out to new highs. So we'll see if that changes, but for the time being, there's not a lot of interest in institutions, or anybody for that matter, in picking up the big guys, the FANG stocks. So that's really the one thing of note, I think, to pull away from today, because there really is nothing to argue, again, with a chart that looks just like this. We can all speculate as to why the market wants to continue to go to highs, but that's not the reason. We're here to look at footprints in the sand and look at the volumes to see how deep those footprints are and what directions they're going, and try and figure out what the herd is thinking, not what somebody on CNBC is telling us. There was a great couple of speakers that we had at the Holly Summit yesterday, and Brian Shannon especially hit it right out of the park once again. Do not concern yourself with the Kramers and the Gartmans and the people that come on to talk their book. There is a lot of misdirection going on if you're going to start basing your decisions on that. Matter of fact, I got an email today, and just in a lighthearted way, I'll address it. The person was asking, by the way, the trade of the week was selected by Barry this week, because I had zero time to help kind of curate that thing. So EVH is kind of our typical trend change lubricant stock with a lot of high short float. But somebody wrote this morning, they said, well, I saw on CNBC and Motley Fool, and they said this and they said that, and they said the target should be this, and what are your thoughts about coming up on the earnings? And I just politely said, I'm not paying attention to the earnings or what people are saying the earnings should be. Matter of fact, I'm not paying attention to anybody or anybody's opinion. We don't do that with the trade of the week. We use our technology, and we use the footprints in the sand. And like Brian Shannon says, only price pays, and we follow the price action. If you want to try and concern yourself with the whys, you're going to make this game just a little bit harder than it already is. So a little preview there for tomorrow's trade of the week, EVH, typical trend change lubricant type scan. And one thing I want you to notice is that Holly actually traded this intraday on this day right here. So not only was it a Holly call, and a lot of times we keep an eye on Holly calls going forward for a couple of days, but it did also, show up on the trend change lubricant. There it is right there, as a matter of fact, EVH. So that's our go-to scan usually, and that's what the trade of the week is. But I think I initially just kind of brought that up as a way of addressing the email who wanted to corner me on all sorts of analyst opinions and what the next earnings reports are going to be. And no, sir, I hear you, but I don't care. All I care about are the footprints in the sand and what the market's telling us. And like I said, the market is telling us the path of least resistance remains higher. So the market is innocent until proven guilty. However, the one thing that is of interest is the NASDAQ big guys, Facebook, Amazon, Netflix, Google, not participating. So that's my takeaway from market analysis today, and I'll have more to talk about on the trade of the week tomorrow when I take over. So that's what I got for you guys. Anything you want to add, Jamie? All right.
Thanks a bunch. I agree with everything you just said, because why do we not care about analysts or CEOs or any of that malarkey? Because they lie. They just
they have a reason. They're already positioned. They're trying to bring in people to help talk up and prop up their position in their book. Typically, that's why people come on CNBC in dresses and suits and ties and talk like they know what they're doing. But all they're doing is just steering you towards what they're already in, and you never really know what their true motivations are. And of course, don't get me started on CFOs and CEOs.
That brings up a good point here, Steve, and I'm going to reflect back on the Trader Summit and the presenters that we had yesterday.
Right.
We had a guy from Random Walk,
yes,
who was incredible. Okay, and he even showcased this. He collects big data, but in a more non-traditional method, right? And he gave us some beautiful examples of just, flat out opposite takes on what the CEOs are saying in their carefully constructed press releases. The coupon thing, I found that amazing, and it fits it to a T,
What
right?
was his name again? I'm so sorry. I don't have
You got me against the wall here.
Dave
All right.
something. Maybe Scott can chime in if he knows who we're talking about. But Random Walk is the name of his group. And yes, he did present some very interesting data that
Uh-huh.
kind of talks exactly what I was talking about. He spells out and he shows you in the chart, and he even plays some nice videos to show you the misdirection in real time and what their proper motives are. So that all just swings back and ties back with, we don't care what they're saying on TV. We care about big data. We care about what we see. We care about charts. We care about Holly. And, he did explain some other interesting type of data out there that can kind of, subvert some of the things they're telling you on TV. It can actually counteract what they're actually telling you. So please don't believe people on TV. Believe what you see with your own eyes, the footprints in the sand.
Yeah, because once again, we had Brian Shannon there, who was, just stellar with his presentation as well. And, once again, to quote Brian, the only thing that matters is price. That's all. That's all. And what do we do to try to predict price movement? We look at the charts, right? It doesn't matter if an analyst is up there going, oh, I'm going to raise this to a buy rating, or the CEO saying, we feel very confident. It doesn't matter. All right. And that's the ongoing theme that you're going to hear when you come to our webinars, is that, everybody tries to complicate things, but, if you just focus on price movement, volume, statistical analysis, and some of your other windows, that's really all you need, simplify.
Yes. Thank you, David, for pointing out. His name is Dave Robin with Random Walk, if that's the truth. Sounds
Yeah.
familiar, rings familiar. But that's why the TV has been off in this office here where I'm sitting for almost 5 years now. I just don't even bother me with that stuff. I know what I see, and I
Just an
follow what I
annoyance.
see.
It's a nuisance. Okay. Jamie and Steve got it out of their systems now, so let's get it on with the continuation of the webinar here. And pretty much Holly, Holly kind of stole the show also, at the summit. I mean, it was the search for the Holy Grail for a reason, and she's been on fire as of late. Today was certainly no exception. So let's just kind of sketch out my thoughts for the day as the day began to unfold. Of course, just like every day, what did I consult first? I don't jump in, I don't trade the open, neither does Steve, neither does Andy, neither does Dan, unless it's a Holly trade, right? If it's Holly spitting something out 5 minutes in, definitely going to take a look, all right? But how do we set our expectations? Or how do I set my expectations, and a lot of other people, since they've been using these windows? We look at our compare count windows after the first 20 minutes, and we kind of get a little read here. It's like, this is, the wind is blowing, and this is how hard it's blowing. We're a sailboat. We have to have wind to take us somewhere. So number one, is the wind blowing? And is it blowing north or south? And how hard is it blowing? Well, looking at my larger cap compare count windows right here on the right, we can see after that first 20-minute period, we had 55% and 54%, basically the same thing here on the big caps. So we did have a noticeable buy-side bias to the tune of about 55%. Now, you may remember me talking about these metrics in the past for the newcomers. To get a pretty decent bias, I like to see a 55%. If it's below that, it's still a bias. It's just not going to be as prevalent. But today we came in right at the 55 mark. So there was definitely a northern wind blowing today. And it wasn't gale force like some days when we see 60, 65%, 70%. That's hurricane, all right? That's hurricane speeds. We were nowhere near that. And yeah, Mike, I switched my screen resolution back down just for you, but we're gonna have to get you on a support call and figure out why you can't see when I'm in 4K mode. So we'll get that knocked out in the future, just to let you know. All right. So number one, my expectations up, strong bias to the upside. So what happened after that? All right. Well, number one, we also have to be constantly vigilant about where the market is. Well, we all know what's been going on over the past few days. We broke out of this level and we've slowly been marching up. And of course, Friday here, Monday here. All right, so up, up, and away. Now, when we see the market doing this, you know, it's like the old saying, rising tide lifts all boats. And it's really not all boats, but most boats. You know, there were still stocks hitting lows today, as there always will be. Some things were getting sold, but for the majority of the market, things were going up, up, up. So we've got our upside bias. We've also got the indices confirming, hey, by the way, I'm at all-time highs today, of course, with the exception of these guys, which are lagging, which, by the way, Steve, should an ETF lag that much? You know, NASDAQ hit all-time highs on Friday, but the Qs down here, simply because of the overweighting, I'm guessing, right, of the
it definitely has to do with the weighting and how it's certainly being weighted. Yes, that's the only answer I could come up with.
Yeah, so in essence, Wall Street's kind of broke the Qs for a while, and you don't really hear them talking about it. It just doesn't make a whole lot of sense, but oh well, I'm not going to try to make sense of it. So in any case, after we get our upside readings from the compare counts, we know the wind's blowing north. It's not gale force, but it's strong enough. All right, so we've definitely got that upside bias. And then, of course, Holly came stacked today with, let's get this back over here, 11 strategies, all right? All of them were long except for a couple of shorts. Of course, those guys didn't fire anything today. No big surprise there. And she kicked out a total of 23 trades, all longs, all right? And, of course, if you were watching, then hopefully you were also participating in this little bonanza that she put on here today. So we can see all the strategies here. We can see the two shorts didn't produce anything, and everybody else got a little piece of the action here. Now these guys down here, bounce, breakout, horseshoe up on the risk off mode. Underperformed today. These guys slightly underperformed, but these guys picked up the slack up here. Overperform, overperform, slightly under here. Now, looking at the difference in the equity curves today, because we've modified the reduce risk and the profit save functionality, which today we only had a couple of profit saves here. But okay, what is profit save? Okay, there's a flat on those trades. My eyes were playing tricks on me there for a second because I was looking at risk on. I was like, now, what am I seeing here? Okay, Jamie's better now. All right, so risk off or risk on, 2.22 on risk off on that family of trades today. If you're taking a little bit more risk, which we can address on a trade by trade basis, almost triple risk off today. But a pretty healthy risk off total nonetheless, and it has been getting better. The difference between risk off and risk on today, since we've modified the reduce risk and the profit save functionality. But when you look at just the upside movement today, it's really no big surprise to see how risk on finished. Risk on definitely wins the day today. So we've got some very good examples of going risk on a per trade basis, and I'll showcase those. And then we also had a couple of good trade arounds today. So we're starting to see those pop back onto the screen. They kind of dried up for a while there. But in this market, anything's possible. So let's just take a peek here, and we'll just see when Holly, you know, we can see here today she started pretty early. We had Sunrise Mover kick out 3-4 here in that opening 10-minute period here. So typically when Holly is executing that quickly, you'll probably want to pay attention. So let's just do this real quick. Silence that phone there for a little less noise pollution here. All right, so let's take a look at the trade arounds first. All right, and as we can see here, let's see, where did my cheat sheet go? The trade arounds today that I want to show everybody first were in Lilac and Fast. So here we have Lilac. Why did Holly get out of the trade? Let me get it on the 5-minute here. All right, so here's Lilac on the 5-minute intraday. And why did Holly get out? Holly got a little nervous here. Reduce risk. And we can see that she went ahead and ate that 34-cent loser today on Lilac. But everybody needs to take note here. The stop was never hit. All right. And let's all keep in mind that a stop loss is there for a reason. That's what you're willing to risk. You know, typically as traders, if we set a stop, we're going to stick to it. Now, it started encroaching on that stop loss. It gets a little wicky. Holly goes ahead and pulls the trigger and says, I'm going to go ahead and get out. Where did my thing go there? Okay. So she goes ahead and eats that 34-cent loss, but we can see gravitates down, doesn't quite touch it, goes back up to that line, hugs it a little bit further, and then takes off. So while Holly is showing a 34-cent loss in risk off, what you need to get into the habit of doing is when you see Holly down in a trade, if the stop loss has not been triggered, or even if it has in some cases, typically a lot of the times they'll go right through there, buy a little bit and come back up. But whenever you see Holly negative on a trade on her open P&L, you need to get in the habit of coming back up here and setting a price alert so that if it goes back up there and punches through again, you'll be alerted to it. So this is a great example of a trade around. Holly got out, stop loss was not hit, comes back up and hugs the line, and we have an opportunity for a second entry there, and we can see that would have worked nicely. Let's say you were in a couple hundred shares here, comes down, doesn't get you out, you're like, I'm sticking to my guns, that's what a stop loss is for, and then we get this little wicking tail right here, and then we start going back up. That's always a good indicator, especially when we see a little wick on the candle there. This simply means the buyers tried to take it down, but they could not maintain control. And then when we see an ascension back up to the entry line, that's always a good opportunity to leverage that position up a little bit more. Because sometimes they go immediately, sometimes they'll pass back and forth through the entry signal 2 or 3 or 4 times. And then of course this little guy hugged it, hugged it really tight there for a little while. So that's also a very good indicator, right, of buyers and sellers becoming equal for a little while. And just keep in mind, the statistical probability that Holly gives us, it's good for the entire day. It doesn't mean it has to go immediately, even though sometimes they do. So keep that in mind when you see Holly down in a position, set that price alert for the second break. If it never gets there, you never get the alert. So no harm, no foul. All right, and the second one was in fast today. Once again, reduced risk. Holly books an 8-cent loser. Same song, same dance. Profit, or excuse me, the stop loss is down here. It gets close. There's that telltale wick again, right? Tried to zip it down. They couldn't maintain control. Boom, right back up. If we would have set our price alert here, we would have got that second time it came through, and then off to the races. So remember, statistical probability, good for the day. Sometimes they do this, and it's a chance to capitalize, either by adding to your position or simply making your entry down here, in which case you can get a better price than Holly sometimes on these entries. It's just about repeating and rinsing and getting used to going through this process here. All right, so it looks like Steve's doing a pretty good job at keeping keeping the question panel updated, so I'm just going to continue here. And now, for the majority of what we're going to talk about today is in the risk on category. And how do we know when to go risk on, risk off? It's not something that we pick at the beginning of the day. This is just for informational purposes to show you, okay, if Holly's obeying her rule set and you're following her verbatim, this was the yield on that trade count. If you're accepting more risk, this is what you would have been up holding everything into the close. But we don't have to hold everything to the close. All we have to do is check out these columns right here. Risk off, risk off over here, risk on over here, WGO. Look at this beautiful little trade, all right? So what does Holly do? She gets into it and stays in it for the duration. She does not get stopped out, but her timed hold expired. Now, when we're talking about a timed hold, all the strategies are geared towards intraday hold times. We look at the on support strategy here. We can see it's designed for a 60-minute hold time. So the shaded area here is the 60-minute period, and we see Holly getting out right about here because she's programmed to do so. Takes her 27 cents and says thank you. Now we're in the trade with Holly. We see her exiting. we pay attention to what she's doing. But if we think that we can get a little bit more out of this trade based on what we're reading on the chart, then we can decide to go risk on. I'm going to stay in the trade because I think there's more left in it. And in this case, there certainly was. There was a lot left in it. Lots of meat left on that bone. All right. So easier, you know, I know that it comes natural for me because I've seen and done this so many times. It may still be a little hard to grasp for some people out there. So the easy way to remedy this problem and get over the learning curve a little bit quicker is to do a little bit of both. All right. Can't hurt. So Holly gets in here, say you're in 200 shares, we pop up here. Hey, I see Holly's getting out, but man, this thing, you know, it didn't act like it wanted to go down anymore down here, never really got close to the stop loss. Okay, I'm gonna peel out of 100, I'm in 200, I'm gonna go ahead and go risk off with Holly, book my profit. I'm gonna keep the other 100. I'm gonna adjust my stop loss down to just a couple of pennies above the entry price. That way, if it does fold back over, then I get stopped out relatively close to flat. I still made money on the first lot. Okay, risk management 101, which is extremely important. All right, it's the second half of the equation. If you don't manage your winners and your losers properly, bad things will happen. In this case, we peel out a half with Holly here, and we get to enjoy a nice little ride higher. Now, did we get out here on the second lot? Did we get out here? Did we panic and get out here? Whatever. Maybe you held it all the way to here. But the point I'm trying to make here is there's a spread between risk off and risk on, and in this case a very big spread of about $1.51, right? So whether you only pulled out 50 cents compared to Holly's 27 or anywhere in between here, that's the name of the game. You're pulling out more alpha than just simply risk off because you know what you're looking at now. You know what it means. All right, it's to be addressed on a trade by trade basis each and every day. So a lot of juice left in that one. Second one we have here, DVVT. Once again, this one, boom, off to the races immediately. Doesn't take a pullback, doesn't wiggle, doesn't pass back through that line at all. And then, you know, a nice little consolidation up here. Why did Holly get out of this one? Once again, the time stop expired. For Sunrise Movers, I believe it's a little bit less, you know. The one that we just looked at for on support, we're looking at a 60-minute hold time. Sunrise Movers configured for a 30-minute hold time. And once again, the shaded area here is Holly getting out. And of course, this one, we get a nice little run up. Buyers are out in full force here. When we see these little consolidations right here, what does it mean? Simply means stock's taking a break. Buyers and sellers have become equal for the most part, and that's when we get a sideways movement, consolidating over time. Now, I really like when a stock does this, because if we get a nice entry here, we get the little second half of the run up here, or in the money while it's taking its little breather. So all we have to do is draw a line right across the top of those bars, take the high point, and wait. What are we waiting for? Well, we're waiting for the trade to continue, hopefully. And of course, it kind of dips down here, sneaks back up, and then crack. What does it do right here? This is an intraday range break, right? So we got into the trade initially from Holly because why? Well, we had statistical weight to the tune of 68.8%, which, by the way, was the strategy that came in with the highest odds today. So, okay, I'm in this trade with Holly. It's working, 68.8%. I remember what Jamie told me. Sometimes they'll consolidate, and if the buyer's really there, they're going to break that plane. They're going to exhibit that range break. And that's a great pattern in and of itself to just trade in general. But when you see Holly trade that you're already in doing it, and you're waiting for the second setup, is what this is. All right, this is an excellent opportunity to leverage this trade for more. And we can see, you know, once again, do the same thing. You want to get out of half with Holly? Go ahead, satisfy that one demon that sits on your left shoulder, greed, right? And he won't bother you anymore. But don't give it all to him. And then wait for the second setup. When you get that setup, push through. You know, this is a trade that could have made your whole day right here if you know what to look for on that second tier. All right, and then once we break that plane, just a nice steady march up till the end of the day. So trying to demystify here, because we get a lot of questions about risk on, risk off, and it really is quite simple once you know how to address it. So there was risk on all over the place today. So what do we have there? Another spread of about $1.24. So, you know, maybe you made 80 cents, 90 cents, maybe you squeezed a buck out of this thing. But as long as you got something, the name of the game is to get something in between this spread here. Now this one's a little bit different. JNCE, one of the more gorgeous trades of the day. And we can see 5, 10, 15, 20, 25, about 25 minutes in. All right, and I really love this trade for a couple of different reasons. Number one, first and foremost, Holly spit it out. Waking up, kind of the lagger, kind of the you know, the worst performing strategy, so to speak, which is kind of comical because 58.5% of probability is still huge. It's a big number because all we have to do on a consistent basis is win over 50% of the time, most of the time, you know, roulette example, so forth and so on. But what I really liked about this one, even though it was a short amount of time here, 5, 10, 15, 20, little run up, and then the same thing, even though it was a much shorter time frame, that's still a nice little tell for me, because when Holly pulls it up and she's saying buy it right here, I can tell, well, I'm not on it just, you know, on the penny that it broke that plane, but this is a good looking call right here because, you know, stop loss is already made for us right here. Boom, it goes straight up, off to the races. And of course, we just enjoyed a very nice little run here, which is why you're not seeing a whole lot left on the table here. Matter of fact, if you would have held that one into the close, you would have made a dime less. And now on this one, boom, target hit. We've been seeing more and more targets hit here lately. Usually it's just a one-off every few weeks or so. But the end of last week, Thursday, Friday, target hit, target hit, target hit. Today, target hit, right? So on this one, just most of the meat was in that first move, and you know, really didn't have to make a lot more decisions once we were in that trade. All right, so let's do a couple of more of these. The NVMI, once again, just another one that was off to the races here. Statistical probability was on our side once again from Sunrise Movers. It's got the smaller hold time of 30 minutes, and you can see a little bit left on the table here. Well, actually not a little on this one either. You know, almost twice the amount. So Holly gets out right here. Take half off. Don't take half off. It's a personal preference. I'm just saying that if you're having a hard time getting used to it, just do a little of both. Before too long, you know, it'll be second nature. But once again, Holly gets out right here. Stock spikes up to here, takes a little pullback, does this little sleepy dance here before heading higher. So, I mean, it was just a risk-on bonanza today. So many opportunities. RXDX, same thing, same song, different stock.
It's amazing to see what you can do with a broad-based rally, going all the way back to the beginning of our webinar, looking at those breakouts in the SPY and diamonds and IWM. That's a broad-based rally, and when things don't chop back and forth and they just pick a direction and go, that's kind of what we would expect to see, you know, a much higher value on the risk-on category than versus the risk-off.
Yeah, and usually, you know, a lot of times, I'd say, you know, well, today we're hitting all-time highs, you know, a lot of boats are being lifted, and usually this is what a risk on will look like, you know, 38 cents, 66 cents, not quite a doubler, you know, but just due to the nature of the market today, we're seeing a lot of big gains. But on this RXDX trade right here, nice little high probability signal. As soon as we get it, hey, little sideways dance. What do? We draw the line like so, cross that high. What do? We wait and see if we can leverage this position. Simple range break. very powerful, especially when you're coupling it with statistical probability. You know, and I'm going to reflect back to the Trader Summit once again, because with the guests and all the traders from around the country that came to, you know, put a face with the online persona, which was a good thing. I really enjoyed that. You know, so many different techniques, so many different ways to view the data. But, you know, it was a very good just clarifier that what we're doing with Holly and the statistical probability shows us that we're on the exact track that we need to be on. And we continue to, you know, to preach the gospel of statistics because it works and it demystifies and it simplifies, all right? And once again, what I'd like to point out here is once you get in the habit of identifying additional setups from an early high probability entry, you can really leverage these things. You know, you had a second opportunity here, even though we did take a little bit of a dip here, just back down to the entry line, right? Never out of the money, you know, maybe risking a little bit of a flat there. And then of course, this one finally released at the end of the day. But the thing about this chart here, it's not what's on this chart, it's what's not on this chart. No studies, no moving averages, no RSIs, no itchy, scratchy clouds, no Bollinger Bands, and the stock still did this thing. Now we could put your favorite studies on this chart and you would notice correlations. But the bottom line is they weren't needed, those studies weren't needed to find this trade. Say you're looking at a high-low ticker, right? There were tons of stocks. You know, if I pull my pack leaders list over here, I think this is the biggest that I've ever seen it for obvious reasons. You know, these are the guys leading the market higher. Big list. Let's just pull an example here. Okay, so SAP, not exactly a huge mover, right? Just kind of lollygagged around in its range all day. And then it got a little frisky towards the close and popped above there and stayed above and then took a little spike at the close, right? Well, could have played that break right there. How would I have found that break? Well, with the windows that I watch, all I'm using is price action and volume. That's all I need to find these patterns. Let's just cruise through here. You know what I need to find this pattern right here? Price action and volume. That's it. That's all I need to find these patterns each and every day, day in and day out. So the point is that price action and volume are king. They're the things that if we took all the metrics, or all the studies I should say, and put them into a big witch's cauldron and lit a fire into that thing and boiled it and boiled it and boiled it and distilled it down until everything was gone except the prime ingredients, and then we looked in the pot, all that's left is price action and volume. So price action, volume, and statistics, that's the trio right there, all right? If you can get used to simplifying your trading routine using Holly for the statistics, and then based on your other knowledge base of price action and volume, it's a winning trio, man. Day in, day out, slow market, fast market, up market, down market. Statistics, price action, and volume. And Steve, I got one more little trick in my bag, but I really wanted to hammer on those three things because it's so important and it's so simple. You know, people are always trying to complicate matters, and you know, there's so much garbage coming at us every day in the data stream. You know, it's all about just figuring out what's real. What's real and what matters. Price action, volume, statistics. That's it. All right, so let's just take a look at the questions panel here.
Oh, they've been keeping me busy, Jamie. I've been typing like a fool.
Yeah. Well, let me just try to verbally address a couple of these so we don't wear your fingers out here. Okay, so we got a question here. Can Holly help beyond one day? Well, interesting question. All right, people ask us all the time. Looks like Holly's just for intraday trading, no swing trading, capabilities. Well, Holly's designed for statistical probability for the entry. Entries, you got to have a good entry. Everything starts as a day trade, and then you decide whether it warrants being held overnight. Can't control that overnight risk though, so keep that in mind. Now, let's just take a look at WGO as an example. Okay, yay, everybody's happy. Well, let's say you bought this trade with Holly and you held it into the close, and 5 minutes before the close, you're asking yourself, well, maybe, should I hold this for a swing trade? Well, what's the skeleton key that we always look at? We look at the daily, and we have to look to the left. Ladies and gentlemen, when you look to the left, you're looking back in time, all right? You're trying to ascertain where the next level of resistance might be. Where will this stock bump its head? Well, pretty much scroll back as far as I can on my daily here. Let me just make sure here. Now, looking at this daily chart, of course, I drew the line here, so we can't say it's going to bump its head there. It's out of its box. It's in blue sky territory. It's at all-time highs. There's nothing theoretically for it to bump its head into. So if you're a swing trader, that might be appealing to you. Now, on another topic, you might want to focus on this little arrow right here, because we've recently added this feature, still in beta, should be released to you guys relatively soon. And let me preface this by saying Holly's only been around since 2016, the very beginning. So she's traded tons of stocks during that time period. Now, every time she trades a stock, we're going to put an arrow by the day where she called the long for the intraday, so that users can go back and see, well, Holly put me into this trade intraday, and now I'm looking at the pattern on the daily, and by golly, it looks like it might be a really good swing trade because it's looking good on the daily. Either there's no resistance, or it's trying to fill a gap, or it's got some room in it, depending on the chart. Now, eventually, we're going to see a lot more stocks populate. I just pulled this one up because it's one I remembered, CYRX, and you can see all the blue arrows there. So, imagine you got the signal way back here on an intraday buy for CYRX, and you might have played it and made some money, but you pull up this chart and then you see what's happening. All right, so I hope that kind of answers the question, Valen, as to
oops. The same could be said for that EVH that I alluded to a little earlier. Not only did it show up on the trend change lubricant, which I, by the way, did share in the chat window. A couple people asked about that, but on the EVH, you'll notice 3 or 4 days prior to today, Holly was seeing something, and it showed up there on the daily chart. Did you freeze your screen there? Oh.
No, I had to deactivate Skype because
yes, yes, people getting chatty on there.
People getting excited about the summit
that we just had. Yeah,
I just silenced them. Yeah.
EVH, just real quick, EVH once again is another example of how not only did it show up on the trend change lubricant, it showed up a little early there on that daily chart, showing you that it was digging itself out of a hole and maybe one to watch going forward. So it's just another piece in the puzzle. I want to circle back on the questions here for David. He had asked a question and I answered it incorrectly. And his question was essentially, Jamie, those charts that you're tweeting throughout the day, is the source of those stocks you're posting throughout the Twitter day, is that coming from the volume scanner exclusively?
Okay, so
go ahead.
Let me make sure I understand the question. The question is, what the chart patterns that Jamie's tweeting out as QuantBot on his Twitter feed, are those Holly plays?
Is the source of all of those stocks you post on Twitter every day coming from your volume scanner? That's what I
Right
need
now,
to
I
follow.
will showcase some Holly trades from time to time, and if they're a Holly trade, it will clearly say on there at Trade Ideas Quant, highlight, blah, blah, blah. Now, if it's just a regular chart pattern, and let me see where my Twitter feed is here. Okay, well, it's not readily accessible because my desktop's all whacked out because I had to change my resolution. But the bottom line is the majority of the patterns that I'm showing on Twitter are simple consolidations. All right. You know, I can't think of one. Oh, here's my window here. So this window is where I'm getting a lot of those plays. Okay. For example, SAP, right? If a stock is range bound, it can't get out of that range without breaking the plane. It's got to hit a new high. So when I'm watching this ticker during the day and I see something hitting a high, I'm pulling the chart up and I'm just, number one, identifying, yes, indeed, it is breaking out, starting to pop above those highs there, and it's doing it with volume, otherwise it wouldn't come through here. So the majority of those plays, unless I say it's a Holly play, I'm just pointing out the fact that, hey, here's a stock that's consolidating in a relatively, you know, identifiable consolidation. I find it interesting. What you do with that is up to you. You know, it all jives with, well, what's the market doing? What are the compare count windows doing? You know, here I see a stock, it's breaking above the plane. Maybe I can get into it with low risk, right? So it's just a simple consolidation. Range trade.
There's actual qualification, LMT. Where'd you find that one today? You'd mentioned that one on Twitter today. I was just curious. Was that off the volume radar?
LMT. Yeah, this was the one that was hitting highs into the close. Okay. Yeah.
So the answer is it could come off of one of many screens. I think there's just really no way to pigeonhole or paint yourself into a corner that all the stuff Jamie's tweeting out is coming from either Holly or from his volume radar or any other type of alert he's got.
It might have come from this one. I can't remember off the top of my head if it was this one or just the regular turbo brakes up.
It's a hodgepodge, as a play on his word. Jamie
But once again, I remember my tweet. I'd pull it up if I could find my browser, but it seems to have disappeared. So look what LMT was doing. You know, they were running it into the close, right? So it just broken that plane, so it popped up on here somewhere. So all day, it took it all day to get back up there. So then it starts pecking highs. Lockheed Martin, what group is it in? It's a military industrial complex stock, right? So I always find that interesting. They ramped it at the close. What's it doing on the daily?
That daily is pretty.
Okay, so that's why I said in the tweet, this is one you want to keep an eye on for tomorrow.
There's no congestion. There's no downtrend. All it's doing is knocking on the ceiling, looking for a crack in the ceiling, and hoping it has enough strength behind it to push through. So that right there is a perfect example to mark up, you know, in my opinion, as a price alert, because if it goes and you don't see it, you might miss it. But using price alerts to complement the things that we see on different scans, they're not all coming from one scan, you know, we're trying to simplify it as much as possible, but it still does come down to what does the daily chart look like? And that one right there is a pretty nice looking daily chart. It just keeps creeping higher and it's just looking for a reason to break through the glass ceiling, like the Willy Wonka elevator.
Right, and I like these little, flush downs and then recuperations.
End of day buybacks, bottoming tails, exactly.
Yeah, with a little hammer up there. So hey, keep an eye on LMT tomorrow, and if it goes, then try to pick up on all the other, Raytheons, things of that nature that are, all part of the big military industrial
complex. Having a good time, yes.
Yeah, what we could call War Inc. So I hope that answered the question about LMT. All right, well,
caught up.
Time flies when we're having fun. We got about 4 minutes left here, so anything to add, Steve? Want to take a couple of charts, or should we just bring Scott in?
Nah, just to add that there's no one golden ticket, one right way to just say this equals that and that's going to equal that and therefore that's going to work for you. No, it's a hodgepodge. Again, play on your words, your last name. It's a hodgepodge of different alerts, but it does come down to the discretion of the trader. And some charts are just not going to look great. Holly might make a couple of interesting scalps, but when you look at the daily chart, it might be in a major period of congestion still, but a lot of the charts that Holly does spit out is clearing resistance or are clearing resistance. And then again, back to that last example, you know, when you see a chart like that breaking, ready to break it through the glass ceiling, you know, those are the ones that should be catching your eye and not trying to get too caught up on how we found it or how we scanned for it. The bottom line is Trade Ideas brought it to our attention, and we got to mark it up and hope that we don't miss the actual breakout using our price alerts.
Right, and you know, in the spirit of what I was describing about LMT being part of the military industrial complex, well, look, I just pulled up NOC as well, which was pumping through in the last 2 minutes of the market. Northrop Grumman, guess what? They make all that stuff too. They're part of War Inc. You know, they do a lot of the logistics and aerospace stuff. And of course, what did it do? It had a nice little break from its range, a nice steady, you know, consolidation into the close. They ramp it again. Oh, well, look at little Northrop. It's expended a lot of energy getting up here. So, you know, not quite as pretty. See, in my opinion, Lockheed is kind of the lagger here, exhibiting a much prettier chart, you know, telling us for a move higher. And if NOC has already done it, well, once again, if they don't gap LMT tomorrow, too far out of that range, definitely keep it on your radar. Okie dokie. Scott, if you're listening, how about playing us out, sir?
That sounds good. Hey, I think they put a new slide in there or updated something toward the end with a little bit about how people can watch yesterday's event. Yeah. So I've redirected that trade-ideas.com/livestream link just to go directly to our YouTube channel where we have the entire day yesterday available for viewing. Now it is a direct live to tape version, so it's got the breaks in there too. And so you're going to want to jump to 18 minutes, 45 seconds, which I think the link will do for you just to start watching it. And that will open with Dave Whitmore from E-Trade. And then there's a bunch of links right underneath the video that will time code link directly to the corresponding presenter. So check that out. We will have individual videos for each of those presentations out sometime later this week, but we wanted everyone to be able to watch it right away. So it's up there. Go ahead and check it out. It's a really entertaining day. Do not miss the panels. The panels were some of the highlights too. So Brian Shannon was excellent. Brian Shannon and Greg.
Greg he stole the show.
Greg Robin,
Brian
Shannon were both excellent. Yes, and everyone was quite good, really. But those two are don't miss them, and also don't miss the panels. I think are the takeaways.
All right.
So thanks, guys. Do that. And tune into our podcast. We skipped last week's because we were super busy getting ready for the event, but we'll be back on at the end of this week, and we will share that with you then. So just search for Trade Ideas Podcast in whatever application you use to listen. Go to iTunes and search for it. We're right there, and subscribe. Then you get the new one as soon as it comes out on Friday afternoon. And there's a discount code for everyone that is not yet a subscriber or who wishes to do an upgrade. We have a new code this month, and it is FinTech, and it's all caps. That'll save you something on your 15% actually off the first month or year of your standard or premium. And remember, that includes a full hour of training with Jamie, Steve, Andy. That's the best way to get started after you subscribe. Use the software for a little while, come to the trading room, come to the webinars, and then book your training session and take advantage of that full hour. It's really great onboarding. So thanks, guys. I hope everyone checks out the recap of the live stream that we had yesterday. It's whole thing's about 7 hours long, but I think there's actually 5 hours of content in there once we cut out the breaks. Thanks, Steve, and thank you, Jamie. Any questions? Email us, info@trade-ideas.com.
Yeah, thanks, guys. Thanks, Steve. Thanks, Scott. Thanks, everybody, for attending. And we'll see you tomorrow for the Trade of the Week.
Sounds good.
Thanks, y'all.
All right.